Fetch AI is one of the few AI coins that I believe is going to give us more than a 10x in this bull market. And on today's update video, I will be giving you the reasons as to why I believe we can easily get more than a 10x in this bull market, and above all discuss my short-term price prediction analysis, where I am expecting a breakout in the next coming hours the moment we manage to break above our key area of resistance above the 1.48. So make sure that you stick around till the end of the video, and starting the video by first giving you my long-term price prediction analysis. I still believe that we got our bear market lows last year and started an impulsive movement to the upside in a move that peaked above the 3.479, giving us the high for this Elliot wave count 1. And after we picked in that wave 1, we started a corrective structure in an Elliot wave count 2 into the minimum pullback target areas for the second wave, highlighted on the chart using this blue target area, an area that we have now fully maximized, continued to hold within the area, and soon I'm expecting that we are going to see a reaction of this area, giving us an explosive bounce to the upside in an impulsive Elliot wave count 3, whose minimum target areas can be given by connecting the trend-based Fibonacci from the low of the first wave to the high of the wave 1, then dragging the fibs to the low of the second wave, giving me a minimum target area at the fib level 1.618, and that is above the $6. Then we can expect a short-term pullback in a wave 4, then continue pushing even higher in a wave 5, possibly taking us back above the $10 and giving us more than a 10x to the upside. So that is the price action that I'm expecting on the long term. On the short term, we have also continued to obey the Elliot wave structures, and at the time of this recording, we are now attempting a break above a key area of resistance above the 1.48. And the moment we manage to break above that, maybe with a retest, I will be expecting an impulsive bounce to the upside, possibly taking us back above the $1.8 in the next coming hours. And using the Elliot wave structures, you can see that from the lows that we made on the 20th of November, we first peaked to the upside in an impulsive Elliot wave count 1 in a move that gave us a high above the 1.577. And after we picked in that wave 1, I was expecting a bit of a corrective structure in a wave 2, where you can see that we have seen a bit of a pullback over here in a wave 2, fully maximizing the minimum target areas for that second wave between the fib level 0.5 and the fib level 0.7, the fib level 0.618. And after fully maximizing that target area, whatever we expect next is the start of an impulse in a wave 3. Those minimum target areas can be given by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, giving me a minimum target area at the fib level 1.618, and that lies above the 1.955, and that means that in the next coming hours, the moment we manage to break above resistance above the 1.48, maybe with a retest, and also manage to break above the high for this wave 1 above the 1.575, that will be the start of an impulsive movement, getting us back above the $1.95 in the next coming hours. Then from that point, I will expect a pullback in a wave 4, then continue pushing even higher in an Elliot wave count 5. We also need to have in mind that we can also have the fib ratios 1:1 as our target area also, and that is above the $1.7. So that is a target area that we also need to pay attention to, because we might peak in that wave 3 at the fib ratios 1:1, get a wave 4, and finally peak to the upside in a wave 5, getting us back above the $2 in the next coming hours. And this Elliot wave structure right here in red is just a micro Elliot wave structure within the formation of an even larger Elliot wave count 3 that I have on the charts in blue. And that the minimum target area for that wave 3 in blue can be given by connecting the Fibonacci's from the lows that we made on the 4th of November to the high that we made on the 11th of November, then dragging the fibs to the lows that we made on the 20th of November, and that gives me a minimum target area at the fib level 1.618, and that is above the $2. So that fully supports my thesis that there are high chances that we can get a bounce, getting us back above the $2 in the next coming hours and also days. And let's be patient and see how that plays out, and I will be keeping you up to date.